Hey guys, it's Scott here. If you are new to this service, what I'm doing every Friday is sending out kind of a learn what we've had this week or a real estate update or when life gets back to normal, maybe I kind of feature a small business or a restaurant or something in town here. But the point of this is to kind of bring real estate information to you every Friday as well as all the sale prices. So we obviously do it every month. We do a full breakdown of all the sales that have happened, but I'm getting a lot of inquiries about sale prices between each one of those monthly emails. So we're doing it every Friday. Hopefully you enjoy it. So anyway, what I want to talk to you today about is capital gains and investment properties. So the reason I'm bringing this up is because a client of mine just called me last night, just finishing up her taxes, and her accountant needed a letter stating what the value of her home was in December 2019. Now, the reason for that is she bought it as a primary residence a couple years prior to that, and then she lived a couple years, and then she moved out and moved in with her partner to his home. So there is primary residence. So to make it easy, I'm just going to give you an idea of what I'm talking about. So let's say she bought it for $400,000. She moves out December 1st, 2019, and at that point, the home is worth $500,000. This spread, there's no capital gains on that because that was her primary residence at that time. Now, it flips over to an investment property, and now she's renting it out to a renter, and she's still holding on to it. But let's say down the road, she sells it many, many years down the road, and the home is worth $700,000. So what happens is there's a capital gain between the 500 and the 700,000. So there's $200,000 in capital gains. And what you need to pay as an investor is 50% of the capital gain. So 100,000. So half of the 200,000 is up for tax. Now the tax rate is based on your current situation. So in a lot of cases is what happens is an investor wants to sell their investment property when they're making very little income. So they have to time it. In the perfect world, you retire, you have no income, and then you sell your investment property, and then that is taxed at the lowest minimum possible rate. So that would be the perfect scenario, and obviously that doesn't always happen because sometimes being a landlord gets tiring and you just want to dump it. But make sure you have a conversation with your accountant. Make sure you have a conversation with us to find out what the home is valued when you do switch, because this is a perfect situation. You purchase a home and then you move up to the next home, but you keep that first home. It doesn't benefit Jess or myself by any means, but if you're willing to do the work and be a landlord, it could be very financially beneficial down the road. So anyway, if you have any questions about this, let me know. Feel free to ask away, and hopefully you have a chance to check out the sale prices in your neighborhood or what's happening in the townships in and around Guelph. Anyway, hope you have an awesome Friday and enjoy the weekend. Talk to you later. Bye.